Good afternoon, and I hope that all of us tuning in here today are doing well. They're staying as healthy and as safe as possible right now. I'm Dr. Stein Smith, and on the Accounting Working Group podcast for October 2020, I'm thrilled to have on the podcast here today Brett Cotler, tax attorney at Seward and Kissel. And so now I'm going to toss it to Brett for a brief introduction of himself, his firm, and all of that good stuff. Brett?
Hi, Sean. Good to be with you today. As Sean said, my name is Brett Cotler. I'm an attorney at Seward and Kissel. I've been with Seward for about almost 5 years now. So it's been a great experience for me being there. As Sean mentioned, I am a tax attorney. I also sit in our blockchain and cryptocurrency practice, which that explains our involvement with the Wall Street Blockchain Alliance and my relationship with Sean. I mentioned that I've been with the firm for about 5 years because about 4 years ago, when I was only with the firm for maybe a year or two, my boss had come in my office and he asked me, do you know anything about cryptocurrency? And I said, actually, yes, I do. I wrote a paper on it in law school, and this was back in 2014, and it was in the spring of 2014. So for the folks who remember when the IRS notice came out, it was in April, and it was about 2 weeks before my paper was actually being handed in. So, so I had done all this kind of reasoning and analysis of, how the IRS should treat cryptocurrency transactions, and then this notice comes out and my gut drops and I think, oh my God, do I have to rewrite this paper? And, a lot of it actually, I didn't need to. It was, some of it was just the IRS, I thought, took very logical steps because they agreed with me.
Well, yes, of course then, right?
Yeah, that's how that works. So it was more adding citations than completely rewriting. But otherwise it was so I hand him, so I say, oh yeah, let me dig the paper out of my files, and I send my boss the paper, and he goes, great, you're now part of the blockchain practice group.
Timing is everything, right, Brett?
It really is.
And so as we're in the end of 2020, finally, right? As we are finally sort of at the end of this year, I wanted to sort of pick your brain and to ask you sort of what are some of the trends out there? What are some of the things that you're working on? And are there any topics or questions or sort of items out there that are being asked more and more often?
Sure. First, 2020 was a weird year. I had a lot of clients push the pause button. I had a few clients, put the gas on the accelerator. So the questions have been quite varied. The things I'm working on at the moment is probably not representative of the things that I've worked on in the past. I'm doing bit license applications. That's not really a tax or an accounting thing. It's more regulatory, but I am involved in those projects. I'm getting involved with a client. He had actually come to me and said, hey, my accountant set up this structure for me back in the Bitcoin boom a few years ago, and I just want to make sure that it still makes sense today. And I also just want to make sure that, my taxes were filed right. Can I give you my tax returns and you can just kind of review them to make sure that I don't have any, potential IRS exposure. So I'm actually going to get started with that project relatively soon. So that's kind of exciting. In terms of trends and open questions, I think, I see a lot of people in the industry, and like I said, what I'm working on now is not representative of what I've done in the past, but, a lot of folks are questioning, are asking for guidance on 1099 reporting. My understanding is that the IRS is putting some sort of guidance together on how crypto exchanges can give out 1099s and what those would look like. When they get released is anyone's guess, though.
Gotcha. That'd be helpful, though, right? Having some more guidance, right, in terms of actually trying to get the information out of these crypto platforms, trading entities, and actually into the hands of the actual taxpayers, right? That'd be helpful. Yeah.
Absolutely, and I think the general sentiment from most of the well-organized exchanges out there is that they want to provide this information. They're trying to get the information out to their customers as well as they can, because ultimately, their business is satisfying their customers' needs, and one of
Mhm.
those needs is proper tax reporting. So they want to give
Absolutely.
this information, they just don't necessarily know how or how to do it in a way that's compliant. But it's funny you mentioned that, the need for um, additional guidance is needed, and I think that's always helpful when the IRS does give that guidance. But I always find it interesting when you know when this guidance comes out and what the IRS says or doesn't say.
Hmm. No, I
And
mean, yeah, absolutely, absolutely, yeah. No, and really, what I wanted to just ask right now, piggybacking on your comments, is during 2019, 2020, has there been a noticeable uptick in any interactions either on the firm side, on the external client side with agencies like the IRS? Have they been more open to having conversations? Have they been asking more questions?
I think so. Right, actually, probably a week or so before the quarantine started in mid-March, I was down actually at the IRS for a cryptocurrency. It was a symposium, but
That's
it was
right. That's right. Okay.
so yeah, I was there. A handful of other folks from the WSBA were there. There was members from the AICPA. Obviously, a lot of IRS agents were there, as well as from their senior leadership, members of the press, academia. It was
Mhm.
overall a very good event, in terms of the mix of people that were there, and it was very conversational, and it was probably one of the few times in my career that I've actually been able to give direct feedback to a regulator. And
Mm.
and it's always nice when you're having that conversation and someone says something and you see the people from the IRS taking notes, and they'll respond, hey, that's a good point, we haven't thought about this. And
Mm.
this was I think the last piece of guidance the IRS put out before this event was the revenue ruling from late last year addressing
Yeah.
airdrops and hard forks. So I think the IRS kind of heard the industry criticism. I think they know they need to be a little more tuned into what's going on in the industry.
Gotcha.
And they're trying to be. I think there are people there who get it, and I think it's a
Sure.
lot of education, both them educating their own people, the IRS making sure taxpayers are educated.
Mhm.
And I think that's probably one of the biggest challenges in the IRS issuing guidance is, and I think it's, the main issue being is some of this stuff is just complicated. And, for instance, right now I've been writing an article for about a year now on the tax treatment of staking transactions. And
Mhm.
now, granted, my word limit is self-imposed. I
Yeah, okay.
thinking, 500, 750 words, not that long, a page or two, keep it very succinct. And
Mhm. Short, concise.
yeah, I just, so far I have not been able to write a good article within those limits on the taxation of staking. And part of it is just, there's a lot of thoughts and it's complicated.
Yeah. No, and to just add some extra background onto your paper and this topic, would you mind defining that term for us here, Brian?
Sure. I mean, so my view on it, and there's variations I think out in the marketplace too,
Sure.
but it's, if I'm just, Joe investor, I have property in my account that someone needs to use. So I'm going to, let him use that. And as a return for the use of my property, I'm receiving some sort of compensation. So I think the easy, answer for me to give is, okay, staking income is, maybe it's like interest, maybe it's like a royalty. Either way, for me, from a tax perspective, I can say it's ordinary income.
Mhm.
Um, there's risks. What if I don't get my property back? Things like that. Are there expenses? Are those expenses deductible? And kind of as you peel back those layers, you get more and more complicated. And then it's, okay, can staking be a business? If so, for whom? Is it me as the person just staking my crypto, or is it the person who receives my crypto and is actually providing that proof of stake to the network?
Mhm.
Uh,
Okay.
and it's so, like I said, as I peel back all those layers, I'm like, oh boy, I'm over my word limit, or I'm over my page limit. Uh, but it's something that the IRS is probably also struggling with, and maybe they want to give guidance on a particular issue, and they can. And the reason I think that is because back in, I think June, I think there was a chief counsel memo on the treatment of cryptocurrency received for performing micro tasks. So you take a survey, for instance, and then you get a token or some sort of cryptocurrency compensation. And the chief counsel memoranda was very simple. It's just that's ordinary income. And to me and to you, that should be like, okay, well, obviously that's the right answer. You're doing something in exchange, you're receiving property. Code section 83 squarely deals with that. Why does the IRS need to put out a memo on it? It seems to be common sense, and but I think for them, they have to kind of, they have the very easy black and white cases. I think they need to answer those questions first before they can kind of get into that gray area of how do we treat staking? What's this? What's that? The 1099s from exchanges.
Makes sense. And actually to sort of build on that sort of area, has there been any upswing in interest as the price of crypto like Bitcoin seems to be on a upswing right now towards the end of 2020 as compared to earlier during this past, I don't know, year and a half or so? And then has the conversation around any sort of central banks issuing their own virtual currency come up in terms of any tax questions or in terms of sort of how this could work from a international payments angle point of view as of yet?
Internally, it's come up.
Sure.
At just very kind of high level, basically an academic discussion. Do we, I think at a very high level, I think some of my colleagues have expressed concerns over, if there's certainly international payments, you're risking, OFAC sanctions issues if it's not done properly. But that's kind of a general cryptocurrency risk. Obviously, with the CBDC, it's, you're probably facing less of a sanctions risk if it's, if in fact the cryptocurrency we're just talking about is, maintained by a true central bank. Can that be a Section 988 foreign currency? I think yes, you probably can have a CBDC that would fit within that bucket. But like I said, I think the conversations we've been having have been more, more intellectual than anything.
Gotcha. Yeah. No.
And certainly we haven't had a client come and say, "Hey, we want to know the answer to this." So
Instantly,
here's our letter of engagement and
yep.
research, and here's a check. We haven't had that conversation yet.
Okay, gotcha. And so, obviously, the whole blockchain crypto asset space is moving and changing quickly, right? We have DeFi, yield farming, all kinds of other new applications, right, that are entering the broader business now conversation. And so to sort of wrap up our conversation right now is if we are talking about 2021, 2022, 2023, right, a couple years out, are there any sort of hot button questions, burning issues, right, your top one or two burning questions, burning open items that if you could magically have them addressed, what are those?
I think the 1099 issue is probably the big one. And I also think that's probably the next big, item of guidance to come. Yeah, I mean, in terms of all the kind of the new developments that's happened over the past year or so in the industry, I think the IRS, based on their, history, I think they're going to lag behind in those developments and issuing guidance. So I don't think we'll see, IRS memos or notices. I mean, maybe they'll address it in FAQs and, some of these newer things, but, certainly some sort of non-binding, sub-regulatory, just issue of guidance. I think the IRS's guidance, in the area of valuation could obviously use some help. One of the consistent messages I've heard from IRS agents has been, in terms of valuation or really anything, it's do something reasonable and apply that method consistently.
Okay.
And, if you're a taxpayer and you're making a good faith effort, you should be avoiding penalties. And, I think if they could help taxpayers figure out the valuation of certain things, and I think the 1099 reporting will probably help with that. And I think the issues are related.
Mm-hmm.
I think that could be very helpful to kind of, just traders, investors, participants in the industry. I think those two would be it.
Okay, perfect. And as you had actually said, those two do go kind of hand in hand, right? Because in order to have more transparency and more consistency into how things are actually being treated, valued, shown on the income statements and their tax returns, folks, be they individuals or institutions, are going to hopefully want some more guidance, right, out of agencies like the IRS. And Brett, I just want to say thank you for hopping on the podcast today, October 2020 podcast. And I think we're all hoping for some more guidance and some more information going forward. So, Brett, thank you so much.
You're welcome.
Absolutely.